Good day, fellow investors. I've made a deep dive into Sibanye Stillwater, which is a very requested stock, or has been over the last years, so smash that like button if you enjoy this. We will discuss the stock, the business cycle, the financials, and what are the key factors related to the risk and reward of investing in Sibanye now. Let's immediately start with the stock. If you look at the P ratio now, it is 4.23, but always keep in mind the P ratio reflects what happened last 12 months, not what will happen the next 12 months. The stock price is reflecting there, the dividend is still looking good, the market cap is 3 billion, and now we have to see whether there is more value than that going forward or not. Sibanye produces PGM metals, gold, now going into lithium, zinc, etc. And thus it is a producer of commodities, and it depends on the supply and demand for those commodities. If we look at the business, well, it is diversified, mostly producing in South Africa, now something battery metals in Argentina, US, some other things. And we look at production, we see good production of gold, DRD gold I think was the first gold there, PGMs, okay, also producing in the US, recycling, nickel, and there should be more battery metals coming online as they have invested a lot in these green energy solutions, going away or better diversifying from palladium, platinum, and rhodium. That is the base of what they do, alongside of course with the gold and their production there. So when I'm thinking, why are they going into all these battery metals? Well, they are diversifying and investing because perhaps they also know that the end is near for these metals. More about that in a second. If we look at the cost curve, you can see that there are cheaper producers and there are more expensive producers, cash costs, and then also including capex. And the prices now are a little bit lower than that. This is in South African rands, and the spot basket price is 23,000, and you can see that the 23,000 are somewhere here. So it's not really profitable to mine these metals for more than half of the miners there, which means it's an ugly situation. Very few people will make money. This is for Sibanye. They have a little bit of production also above the cost. They need to optimize or idle that and then readjust the supply and demand in the sector as the biggest players there. And then something important to know about mining, that those are finite operations and you need to invest a lot of money. If not, your production will simply go down like this in 10 to 12 years. And companies need a lot of money to keep production as high as possible, and then they will need to reinvest, buy new projects to keep things steady as that is. And you can see here the extreme high level of investments, and this is a typical chart. Don't think that the investments will be lower. In 2026 the investments will again look like this, and then again look like this, because this is what they plan now, but then there will be more. So there is always this 1 billion a year needed to be invested just to keep things stable, not even growth. Even if they call it growth, but it is not really growth, it's keeping things alive. Gold operations, they have a lot of those, and if you look at it, a little bit less than half is not profitable. So they have extreme high gold mining costs, which was usually the case for South Africa with these deep mines. And the guidance is for production. If we look at sustaining costs for their production, they will not make a lot of money going forward. They made a lot of money as those prices were high, and let's look a little bit at their story to understand where they are investing their money, and then you can also understand the risk and reward of the path they have chosen. And then of course see how that fits you. First, they discuss these batteries, the revolution coming, how there will be more and more electrical vehicles sold, and then they discuss multipolarity, angry people, big squeezes, the angry planet as something that has a huge impact on the way they do business, but I don't see it. A lot of big words in their presentation. It feels like they are a little bit lost because this is the reality. The reality is that the use of rhodium, which was the greatest benefit to their revenue pile and profit last years, it's auto catalyst, 92%. 92%. Platinum consumption, auto catalyst, okay, 42, jewelry, industrial, and then palladium consumption, auto catalyst, 84%. So this company depends on, of course, some gold, some diversification there, a lot of money going into the battery metals projects, but it is an auto catalyst company, and if there are more cars sold with catalysts, great, but electrical, as they say in their presentation, don't have catalyst. Thus, the future use of palladium, platinum, rhodium could be much, much lower, which means ugly. And they have started to diversify with these big words, battery, etc. But will it be enough is my question. And if I look at their revenues, their financials, you can see here rhodium was the leader, then gold, palladium for the first 6 months of 2023, but that is all auto catalyst, and yes, they have a good balance sheet, the debt is in line with the cash, so nothing wrong there. But if I look at the cash flow analysis, the adjusted free cash flows are significantly negative on the high investments, but if those investments do not lead to the profitability they expect, then that is destruction of money, and especially a company that knows how to mine PGMs in South Africa now goes and expands into mining battery metals or things like that in Europe, etc. It's not that straightforward. Mining is a high-risk environment. And the first 6 months, you can see here, net cash from operating activities, 272, more spent on investments, and that means that the cash flows will be negative going forward if the current prices persist. So let's look at the risk and reward in the sector for those prices. Number of cars sold worldwide, okay, things are slowly growing. If we have a recession, this could be lower already. Then I found this projection from S&P Global Mobility Research. So everyone is going to electrified, 40% BMW, Jaguar 100% electrified, Ford doubles investments, GM investments, Stellantis 30 billion EV investments by 2025. If we go to 2025, 40 period, 100% plug-in passenger cars in Europe, EV lineup, Bentley, Jeep, Toyota, BMW, Stellantis, everyone is going 100%. And if you go 100% and if this demand goes to here, the next cost curve will be like this. And yes, these guys will make money depending on also the industry cycles. But as they say, peak internal combustion engine is behind us. And when it comes to investing, I prefer to invest with tailwinds. As Warren Buffett says, if you invest with tailwinds, even if you make mistakes like buying at the wrong time in the short-term cycle, sooner or later you get rescued by the strong tailwind, the structural tailwind. Here we have a headwind, and yes, you can make money after 10 years of ugly, like it was the case with coal last year, but that's not something you can bet your house on. And these are the projections. We don't know whether it will be fast, faster, slower, something like that. We just know that rhodium prices are still above earlier levels, and the boom here has passed, and we will see where will these prices go. If we have a global recession in 2024, this will look even uglier. Palladium futures are significantly down, so you cannot compare the P ratio 4 because it was made on higher past prices. Platinum is a little bit more stable, but if I look at this, the total revenue here for the last 6 months and just for the current prices in the second part of the year, the EBITDA will be zero. With high investments in a bad market, you are then betting on a turnaround that you don't know where will happen, because you cannot know when the next recovery will happen, because if we have a recession, global recession, a slowdown, less car purchased, etc., etc., it's not just supply and demand for your industry and what you can control, it's also the interest rate on the lease for the new this or that car, their competition, etc. So there are a lot of moving factors. Perhaps the stock will boom, but you never know when will that be. Maybe like this, maybe like this. And I don't think the fundamentals, especially not the cost of production, that this was always a little bit more expensive company. And keep in mind, when you are a more expensive company, you have these big jumps and downturns, big jumps, because when commodity prices go up, you make a lot of money. And therefore, Sibanye is a more volatile producer. When there will be a turnaround, you make a lot of money. I prefer low commodities investments that make money in whatever environment, which means I can sleep well if there is a 5-year recession, which is a costly thing, because when there is a boom, you already make less money, because they make always money, but it depends on the risk and reward you want to take. Sibanye, it's an automotive industry investment, which is not a risk I want to take, especially in this environment where we had great years for the automotive industry. I think they are a little bit over exuberant, and I would wait for a big recession. Then you will see whether Sibanye is still alive, in what form, and then you might look at automotive companies, Sibanye, copper companies, whatever. Cyclical, at mid-cycle, too risky for me. I hope you have enjoyed this, had value. You can check what I do, my other videos. I'll see you in the next video.